What if I told you that one single handshake in Ouagadougou has the power to send ripples across Wall Street, shake the floors of the London Stock Exchange, and make policymakers in Paris lose sleep? This isn't fiction, it's happening right now. Burkina Faso's young revolutionary leader, Captain Ibrahim, has just signed an unprecedented oil and mineral trade pact with none other than Russia, and the aftershocks are being felt from Washington to Beijing. For decades, African nations were told to stay in their lane when it came to global energy and mineral markets. Oil was the playground of the Middle East, gold and rare earths, extracted by foreign corporations under unfair contracts, but now is rewriting the rulebook in a deal that bypasses the US dollar, sidesteps Western-controlled institutions, and locks in billions in mutual trade. Burkina Faso is joining Russia in a direct commodities alliance: oil, gas, gold, uranium, manganese, you name it, and the world's financial elites are scrambling. Stock prices are wobbling. Energy contracts are being renegotiated. And some countries are wondering if this is the first domino in Africa's total economic liberation. This is a Frick Vibe News, where we break down the real stories behind the headlines, and today, we're taking you inside the trade deal shaking the world's markets and setting Africa on a new course. When the news first broke, many thought it was just another symbolic gesture between two nations trying to make a point. After all, Burkina Faso is not yet seen as a major oil player, at least not in the eyes of the West. But those who dug deeper into the fine print saw the real earthquake brewing beneath the surface. This deal is not about what Burkina Faso has today, it is about what it will become in the next 5 to 10 years. Under the pact, Russia will supply Burkina Faso with refined petroleum and crude oil at heavily discounted rates. This is already a massive shift for a landlocked country that has historically struggled to secure affordable energy. But that's just the start. Russia is committing to help build a state-of-the-art oil refinery in Bobo Dioulasso, the first of its kind in the country, within 24 months. On the mineral side, Burkina Faso will ramp up exports of gold, manganese, bauxite, and uranium not through Western brokers, but directly to Russia. And this is where things get even more strategic. Instead of simply shipping raw ore, Russia will invest in processing facilities inside Burkina Faso, ensuring that more of the value chain stays in African hands. This is a radical departure from the colonial-era model, where raw materials left African soil only to return as expensive finished goods. But perhaps the boldest stroke in this deal is the decision to sidestep the US dollar entirely. For decades, the petrodollar system gave Washington enormous influence over global trade, because oil and most minerals had to be traded in US currency. By using the Russian ruble and Burkina Faso's own currency equivalents, the pact delivers a direct challenge to that system. It also chips away at the CFA franc's dependence on the French treasury, a move that will not go unnoticed in Paris. To understand why this is so significant, we have to step back and look at Burkina Faso's history. This is a landlocked nation of just over 22 million people, without the oil wealth of Nigeria or Angola. For most of its post-independence history, it has been heavily reliant on imported fuel and foreign-owned mining companies. Gold became its top export, but the profits largely flowed overseas. The nation's leaders, often under the watchful eye of Western partners, were told that this was simply the reality of the global market. However, is part of a new generation of African leaders who reject that narrative. Russia, too, has its own motivations, isolated from many Western markets due to sanctions. Moscow is eager to find new partners who are not only willing to trade, but willing to do so outside of the dollar system. Africa, with its young population, abundant resources, and growing industrial needs, fits the bill perfectly. By locking in deals like this, Russia secures both a buyer for its oil and a supplier for key minerals needed in industries from aerospace to energy production. The structure of the pact is also telling. It is set up in 3 operational phases. First, there's the immediate boost. Russia begins oil shipments within weeks, and Burkina Faso starts increasing its gold and mineral exports. Second, there's infrastructure development: refineries, processing plants, and transport links that will be co-owned and cooperated by both sides. Finally, there's a Pan-African expansion phase, designed to pull in neighboring countries like Mali and Niger into a broader commodities bloc. Imagine a corridor of resource-rich nations trading freely with one another and with partners like Russia, without having to go through European ports or currencies. The global reaction has been swift and divided. In Washington, there is concern about what some analysts call the strategic penetration of Russia into African markets. Paris is even more alarmed. Not only has France lost another keel ever of influence in its former colony, but the deal threatens to undermine the CFA franc, a currency system that has kept much of West Africa tethered to French economic policy for decades. Beijing, interestingly, is watching with quiet interest, while China already has deep ties in Africa. It may see this as an opening to negotiate its own expanded mineral deals with Burkina Faso and its allies. Across African capitals, the mood is more optimistic. Leaders in the Sahel, especially those in Mali, Niger, and Guinea, are reportedly in talks to join similar agreements. From a market perspective, the implications are huge. Energy traders are recalculating their models, trying to predict the impact of new oil flows into Africa. From Russia, mineral markets are bracing for volatility, especially in uranium, where Burkina Faso's production could now be locked into long-term Russian contracts. Gold prices could also be affected, depending on how much of Burkina Faso's output is diverted away from traditional Western buyers. But this deal is not without risks. The West has a long history of responding aggressively when its economic dominance is threatened. Sanctions, trade restrictions, and diplomatic pressure are all possible. Already, Western media outlets are framing the pact as dangerous or short-sighted, warning of over-reliance on a single partner. Yet for and his government, the alternative, continuing under the old system of dependency, is far more dangerous in the long run. Economic projections are bold. If the deal holds, Burkina Faso could see an additional 3–4% GDP growth annually from energy and mineral revenues. The creation of local processing facilities will generate thousands of jobs, not just in mining and oil refining, but in logistics, engineering, and support services. The value of mineral exports could double within 5 years, and more of that wealth would remain within the country. There is also a cultural dimension to this pact. For decades, the narrative around Africa's resources has been one of extraction without empowerment. This deal, whatever its challenges, signals a break from that mindset. It says that African nations can negotiate as equals, set their own terms, and choose their own partners. For the people of Burkina Faso, especially the youth, it sends a powerful message. Their country is not doomed to be a passive player in the global economy. And let's be clear, this is not just about Burkina Faso. This is about a wider movement in Africa, from the AES Biometric ID project to joint military defense pacts, to build regional self-reliance. The oil and mineral pact with Russia is a natural extension of that vision. If Mali, Niger, and Guinea join in, we could see the birth of a resource corridor stretching across the Sahel, with its own infrastructure, its own currency arrangements, and its own foreign policy. Of course, change on this scale will not come without resistance, but as has said publicly, Burkina Faso will not bow to intimidation. With partners like Russia, and potentially other global South allies, the country believes it has the leverage to stand firm, and in many ways, the timing is perfect. Global markets are already in flux, the old energy order is under strain, and the rise of multipolar trade means that alternatives to the Western-dominated system are becoming more viable by the day. From Wall Street panic to Sahel pride, the oil and mineral pact between Burkina Faso and Russia is more than a headline. It is a sign of the new Africa emerging before our eyes. Here at AfriqueVibe News, we will continue to track every twist, every challenge, and every victory in this story, because make no mistake, this is not the end of the story. It is the beginning of a new chapter in Africa's economic independence.